everyone, my name is Afreen Nazmat. So today I'm going to give you a very quick revision of Unit 4 of IEIFS. Unit 4 is Role of Priority Sector and MSME, Micro, Small and Medium Enterprises in the Indian economy. So let's start discussing. Let's talk about, first of all, what is the priority sector lending? Priority sector lending is actually a way to ensure that the lending should be given to the priority sector. So there are some identified priority sectors by Reserve Bank of India which have been given priority over the other sector. Why? Because they are very important. They are of common need for each and everyone. So these sectors are given priority over other sectors. Lending to these sectors is called as the priority sector lending, right? Now, when we are talking about the priority sector gains popularity in 1972, and it is when the National Credit Council pleased that the commercial bank should give some part of their total deposit to this priority sector. In 1974, the commercial bank has been given a target at a very initial state that you have to deposit at least, or you have to give at least 33.33% of your total credit in the priority sector. But after the recommendation of Krishna Swamy Committee, it is Krishna Swamy Committee. After the recommendation of Krishna Swamy Committee, this has been revised and now the later target has been given as 40%. Now every bank has to give 40% of their total credit as a loan to what? To the priority sector. When we are talking about the very latest revision, again there are some changes which has been done, and the very latest revision has been done by MV Nair Committee. Okay. So initially the target was 33.3%. Then after the Krishna Swamy Committee's recommendation, it was for 40%. Then after MV Nair Committee's recommendation, the target is like a different involvement or different percentage in different priority sector. We will be discussing it in detail in the coming slide, right? Now, when we are talking about the identified priority sector, so we have these identified priority sectors: agriculture, micro, small, medium enterprises, export credit, education, housing, social infrastructure, renewable energy, others, and weaker section. So these are the identified priority sector categories, right? Now, let's talk about the MV Nair Committee's recommendation. So MV Nair Committee's recommendation give different target to different sectors, right? When we are talking about these four columns, this column is for all the domestic commercial bank, excluding regional rural bank and small finance bank, plus all those foreign banks which have 20 branches and above. This is all those foreign banks which have less than 20 branches. This is for all the regional rural banks, and this column is for small finance bank. So when we are talking about the total priority sector, so the total target is given 40% of adjusted net bank credit, means ANBC, or CEOBE, credit equivalent of balance sheet exposure. It is either 40% of ANBC or CEOBE, whichever is higher, right? Next, all those foreign banks which have less than 20 branches, here again 40% of ANBC or CEOBE, whichever is higher. If for regional rural bank, the total priority sector lending target is 75% of ANBC or CEOBE, whichever is higher. Last is small finance bank, it is 75% of again ANBC or CEOBE, whichever is higher. Okay, next. When we are talking about the agriculture sector, for them, the target is 18% of adjusted net bank credit or CEOBE, credit equivalent of balance sheet exposure, whichever is higher, right? For foreign banks, there is no such target. For RRBs, again 18%. For small finance bank, again 18%. Now for micro enterprises, here the target is 7.5% of A and B, C or CEOBE, whichever is higher. Not applicable for foreign banks. For regional rural bank, it is 7.5% of A and B, C or CEOBE, whichever is higher. And for small finance bank, again, it is 7.5% of A and B, C or CEOBE, whichever is higher. Advances to weaker section, 12% here. Not applicable, 15, 12% here. Clear? Now, next thing. When we are talking about the individual small and marginal farmers, see, small farmers or marginal farmers, the difference is marginal farmers are those farmers which have up to 1 hectare of land holding, whereas small farmers are those farmers which have a land holding of 1 to 2 hectare. So the recent target is given in 2003-24 year. This financial year for small and marginal farmer, it is 10%, and for weaker section, the target is 12%, right? Next. Now the definition of micro, small and medium enterprises. Now you have to see the micro, small and medium enterprises has two definitions now. One which is given in your book and one which is updated as per budget 2025. So this year budget 2025 has actually increase the limit of micro, small, and medium enterprises. So we have to learn now both the definition. First of all, I am giving you that definition which is given in your book. The definition is if the investment in the plant and machinery is not exceeding 1 crore, and if your annual turnover is not exceeding 5 crore, then you are a micro enterprises, right? For small enterprises, if your investment in the plant and machinery is not more than 10 crore, whereas your annual turnover is not more than 50 crore, then you are a small enterprises. Medium, if your investment in the plant and machinery is not more than 50 crore, plus your annual turnover is not more than 250 crore, then you are a medium enterprises, right? Now this limit has been advanced, or this limit has been increased. Okay, increased means now in this year budget 2025, for a micro enterprises, the current is if your investment doesn't exceed 1 crore, but this limit has been enhanced to 2.5. So if your investment is not more than 2.5 crore and your turnover is not more than 10 crore, then you are a what? Micro enterprise. If your investment doesn't exceed 25 crore, whereas your turnover doesn't exceed 100 crore, then you are a small enterprise. And if your investment is not exceeding 125 crore, whereas your turnover does not exceed 500 crore, then you are a medium enterprise. So this is all the current which is written in your book, and this is the revised. This is all given in crore. Okay, done. Now next thing. When we are talking about the contribution of micro, small and medium enterprises in the GDP, as I have already told you that in GDP contribution, today the most contributing sector is service sector. Then in second number, it is micro, small and medium enterprises. And in third number, it is agriculture sector. So in term of GDP contribution, MSME's contribution is second. Whereas in terms of employment generation, MSME, micro, small and medium enterprises contribution is at second number. So they both comes in the second number. Give me 1 minute, guys. 1 minute, everyone. Okay. So I was telling you that in terms of GDP contribution and in terms of employment, it is second most contributing sector in both the thing, right? Now, next, there are recent initiative. There are different initiative which have been started in the micro, small, and medium enterprises sector to enhance the MSME sector. Like, for example, Make in India concept, which was started that more and more we have to produce within India, right? Make in India concept has been started by Prime Minister in 2014. We have four pillars: new process, new infrastructure, new sector, new mindset. Okay, very important. Next, emergency credit line guarantee scheme. ECLGS. Now, this was introduced during COVID time to give credit support, especially to micro and small enterprises, micro, small, and medium enterprises sector. Next, there was credit guarantee fund trust for micro and small enterprises. Very important thing to note. Medium is not included in this CGT MSC. So this is again for providing a credit support of rupees 1 crore, and that too for a collateral free loan, right? And this is specially available for only to micro and small enterprises. Startup India, to boost the startup culture in India, it has been started in 2016 with a tagline: Startup India and Startup India. Next, Stand Up India. It is especially to promote women entrepreneurs, female, and those who are belonging to the SC/ST category, right? So, in this, if you are a woman, if you belongs to SC/ST category, you are eligible for a loan of 10 lakh to 1 crore at a very low and minimum interest rate for starting your own business. Clear? Next, production linked incentive scheme. It is again, the purpose is to boost India's production. So budget allocation is given. Coverage: 13 important sectors are covered in the production linked incentive scheme, which include textile, steel, telecom, automobile, pharmaceuticals, etc. Incentives like 4 to 6% financial incentive is given if you achieve a certain target. There are different forms of incentives, like if you have achieved certain target, certain high production target, you will given the direct payment, tax breakdowns, etc. Goal is to increase the production, job creation, social welfare, and tax revenue. And the target is to boost the manufacturing. The target is to invite the foreign investments and to employ more and more people in India, right? So this is production linked incentive scheme. Now, there are other schemes also, which I have given in simple tabular form for you all to remember, like Udyami Mitra Portal, Micro Small Medium Enterprises Samman. Then we have MSME Delayed Payment Portal, Digital MSME Scheme, Prime Minister Employment Generation Program. The description is given, just you have to read it out. Then Spruti, Scheme for Fund Regeneration of Traditional Industries, a scheme for promotion, innovation, rural industries, and entrepreneurs. Aspire, National Manufacturing Competitiveness Program, Micro and Small Enterprise Cluster Development Program, and Credit Linked Capital Subsidy Scheme. Very important is the full form. You have to learn the full form very importantly. Okay. So this is the complete initiative which has been started by Government of India to boost the micro, small, and medium enterprises sector. Clear? So this is the complete revision for Unit 4. I hope that you have all enjoyed this video. Everyone, thank you so much for watching. Take care, everyone. Bye bye, guys. Bye, everyone. Take care.